Well, g'day there, everybody. Traders, friends, market participants right around the world in the YouTube community. It's great to have you listening along to this particular video. What I'm going to be doing is talking about the different fractals that we're looking at in terms of, I guess, the macro, intermediate, and minor level trend of these markets, because it is very applicable, it is very pertinent to what is really happening up and around these historical highs at the moment. I mean, first of all, what I wanted to say was, if you're looking for a market update, I would encourage you to have a look at the video which I posted a little bit earlier, a couple of hours ago. It's important that you get an understanding of what's going on the minor level of the markets. What this address is going to be is more so how the different fractals come together, because oftentimes what I speak about in those market updates is the macro, the intermediate, and the minor level of the trend. And this is going to be an illustration as to why, say for instance right now on the transportational average, why I can sit here and say, well, when this inevitable bounce comes, the really important question to be asking is, well, what is going to be happening at these higher levels, so to speak, on the transportational average that I pointed out, coming in here at about 9,450. So what I'd like to do first of all is just explain to you first of all what is going on the monthly chart. So if we start looking at the transportational average, this is going all the way back to the year 2009, even all the way back to really 2006. But you can see that we have been in a prolonged bullish trend. This is all A-OK. We're still making a series of higher highs and higher lows as the trend has continued. Pardon me, my chart isn't all that nice. You can see there's a few lines on here. But what we have essentially done is that we have overcome the peak that we saw in 2015 on the transportational average. We pulled on back down. We've established this next decelerating bullish fan line, and since the lows in 2016, the markets have collectively gone parabolic. Here we are once again registering a new all-time high on the transportational average. But what I want to do is take this one step further and still go out to the monthly chart, because this is very, very important. When I speak about fractals and larger fractals, when I speak about the macro trend, more so I'm talking about the monthly look, and we can really make sense of this very, very easily. We can say to ourselves, look, the market is healthy as long as one, price remains above these two trend lines, which are extended over to the right hand side of my screen, and two, as long as price continues to make a series of higher highs and higher lows, we assume the trend is continuing. So we can say on the large fractal, the monthly fractal, that the market is still healthy. However, what we are starting to notice, okay, on the monthly fractal is that although prices once again are establishing new all-time highs, the MACD isn't really registering the same highs in momentum. And this essentially gives us what we call negative divergence, okay? And really what this is showing us is that the momentum of the market, so to speak, is slowing, even though price has ever so slightly broken above the highs going back to 2015. What is also very important to note outside of this divergence, and divergence is most important to that of the MACD, the moving average convergence divergence, compared to that of the RSI and also the stochastics. This is still the monthly template of the market. Maybe I can take the annotations off the screen and that will sort of maybe make it a little bit more nice, or at least less cluttered. But what you can also see is that since 2015, and whenever we really generate these sell signals, okay, when you see the MACD definitively cross down, you start to see acceleration into the negative or acceleration away from the midpoint into negative territory, you see markets generally enter into some form of a correction, okay? Most recently, it was the beginning of 2015 where we saw it on the transportational average. Keep in mind that on the macro picture, M for macro, we're still holding above that long-term macro bullish trend line. So as long as price remains above the trend line, we are still bullish, but we can still have, of course, these intermediate corrections within the larger, bigger macro uptrend. But what is interesting to note right now, that on the transportational average, we haven't generated a sell signal, so to speak, on the MACD, but it is very close to generating. So what we are essentially saying to ourselves right now is that, look, we're on the macro trend, we're still healthy, but we really need the market to prove to us that, one, it's going to break back above these swing highs over here. And if that is going to happen, well, then we will assume, of course, the MACD fast line to turn back up along with the slow line, and almost even potentially negate this potential divergence which is forming right now. So we're starting to see the picture change on the macro type of fractal, the largest fractal that we have in the world of technical analysis, but at the same time, it's not generating any major concerns. Now, if I start drilling in, so to speak, so again, this is the macro picture. What I'll do, I'll put the annotations back on the chart for you. You can see here, all I want you to pay attention to are these two lines over here that start in 2009, and then they start to connect these series of higher lows. That is the definition of the bullish trend under or in effect at the moment. So again, going into price action, as long as the transportational average holds above at the lowest count, about 8,000 on our chart, the macro trend is still intact. It's very, very simple. As long as the transportational average, holds above 8,000, okay? The macro trend itself is still considered to be bullish. All right. Now, if I go into the weekly chart, this is where we start to see fractals in alignment, because if I start zooming out again, what I'll do, I take the annotations off my screen. And if you just pay attention to the MACD once again, you have to ask yourself the question on the weekly fractal, are we still registering buy signals or are we registering sell signals? And on top of that, do we have any divergence still? And you know, the answer to that question is, look, since 2017, we have momentarily peaked on up, and we have produced a short-term higher high. You can see just here, compared to where we were at the beginning of 2017 and towards the end of 2016. But at the same time, the MACD is still throwing off divergent signals. You can still see this on the RSI. You can still see this, not as well, but it is still there on the stochastics too. So again, we're starting to see the macro picture fit, of course, the intermediate time frame. Now, the intermediate time frame, I for intermediate equals W equals weekly. So when we start looking at the weekly chart, again, it's zooming more so into the molecular level, but this is confirming the macro trend, okay? The macro trend is up. However, on the intermediate time frame, it looks as though we are still set for a potential pullback. Now, the pullback itself is in alignment with the daily chart. Now, this is where it gets a little bit interesting, because essentially what we're saying to ourselves is, look, the markets are good as long as they can overcome this swing high over here. But at the same time, let me just updates available, move that to the right. Hopefully it doesn't come back up. What we're trying to say is we're graphing the chart. So we're cognizant of the monthly, we're cognizant of the weekly, and now this is the daily time frame. When I bring up these oscillators, they're going to register short-term oversold conditions. This has been in alignment with the pullback dating back to the beginning of, or really mid-July 2017. So essentially we're saying, look, we're expecting the bounce, but what is most important is whether we can overcome roughly this red box of resistance, because if we cannot, well then potentially the weekly chart is going to confirm the daily, which will be the rejection of this resistance area. And then of course the weekly is going to align with the monthly, which is registering some really big divergence, okay? Really big divergence, which has been setting up really for the entirety of 2017, but as well dating back all the way to 2015. And generally market tops, okay, they end with massive negative divergence, bearish divergence, and it happens over an extended period of time. Generally, we get some speculative blow off top, and it's just something that we need to monitor. But once we start again accumulating all of this information, really going back to late 2016, I mean, it has been relatively volatile. If we go to the yearly candlestick on the transportational average, you can see for yourself, look, we're up 193 points, but really for the past 4 years, we're relatively unchanged. I mean, this is all the way back in 2014, 15, 16, and here we are almost in the month of September for 2017, and we're really not gaining all that much traction. All right, so it's quite interesting when we really get a gauge or an understanding of really sort of the breadth of the market itself. The transportational average is okay, more so the Russell 2000 is much more important. But even when we start to look at this picture too, I mean, prices, I mean, it's only short-term below the 100 and the 200, but what is a little bit concerning of this picture is that it looks as though we have produced what we assume to be at this point a whipsaw blow off top, or at least a whipsaw breakout, because, I mean, this has been forming since 2016. We're still in the channel. We haven't broken above it, nor have we broken down. But at the same time, we're giving ourselves parameters of where we will start to become concerned about the market. And these are the parameters that I've already highlighted to you. 8,000, all right, on the transportational average. but also what to look out for based on fractals, okay? If we come up to 9,450 or all the way up to 9,500, who knows, maybe even 9,600. But this red box here is giving us, of course, an understanding of what to look out for once price gets back up into this area. I have no doubts whatsoever that price collectively across these markets are going to push on up. But the fractal discussion, which I've just had with you, is not only applicable to that of the transportational average, but it is also very much applicable to the three widely followed or closely followed markets we look at, the S&P, the industrial average, NASDAQ, but it also extends to that of the Russell, because the Russell is also really throwing off a lot of the same signals. If I bring up the oscillators and go to the monthly charts, I mean, look, go back to 2014. You can see, of course, the decelerating fan lines of the bullish trend line. You can see this on my screen. You've got 1, you have 2, you have 3, you have 4. The series of higher highs. You also have the series of higher lows. Again, we're all A-OK on the market. So as long as the Russell, more or less at some later point, holds above roughly 1,275, right? Roughly the figure, which is going to sort of, line up with this fourth decelerating fan line over here. That's horrible writing, by the way, but I think you get the picture anyway. Everything is okay. However, when we start zooming out again, ask yourself the question, divergence has been forming for about 3 years now. And this is problematic as we produce that higher high in price. And as these oscillators, again, begin to shift negative, ask yourself the question, well, we saw a little correction in the Russell. It wasn't the biggest of corrections last time, but at the same time, we didn't really have all that much divergence. Now the divergence has been forming for 4 years, or 3 years. And, again, this is when we start to see these signals collectively across the board. This is a vertical line. We haven't got it on the monthly chart yet. But if we go into the weekly chart, I mean, ask yourself the question, what are the weekly signals, generating? And are they confirming the larger fractal? Yes, they are. And then when we go into the daily chart, of course, they're going to register short-term oversold. Okay, let me just bring my annotations back on the screen for you. But you can say to yourself, well, if we're back in the channel, we're bouncing off support again, and the channel extends all the way back to December 2016, you have to ask yourself and really ask yourself an honest question. Well, if we oscillate back up to resistance, it's really important what happens at this pivot point up here at this resistance level, because it's the moment of truth again for the markets. Either the daily chart is going to surpass the breakout, and then this will ultimately confirm on the weekly fractals and also on the monthly fractals, okay? Or what's going to happen is we're going to find rejection here, and then we're going to break below the first decelerating fan line that we're most closest to, that we have just interacted with in the month of August. And then, of course, it becomes a domino type of process if we were to break, of course, below some of these support levels. And ultimately, if we were to crack this decelerating fan line, well, then that would open up the door for a larger pullback down to roughly 1,200. So these are how, I guess, these price patterns generate over time. And I'm hoping that you're making some form of an understanding of this video, because again, this is just terminology that I use when I speak about markets. Obviously, it's pretty straightforward. In essence, to me, I've been doing this for a very long time, but I just wanted to take the time anyway to try and explain it, so that you've got a better understanding when I throw out some terminology, very straightforward terminology when I'm talking about different fractals, because the fractals are very important when they align. And they're also very much important when they start to break down and diverge from one another too. So it's always important to get a grasp and an understanding of what those fractals are doing at any point in time when you're looking to place a trade. So on that note, everyone, enjoy the rest of your evening. I'll leave this up for a little bit. I hope you see this. And if you have any questions at all, email me, success@pivotpoint-trading.com. All the best, everyone. Have a good evening. Farewell.